The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman right here on this 6th day of October. My pleasure to be here, noon till 1 p.m. And thank you to our hosts earlier on. Let's keep that high standard going. We're looking at the Dow right now, down 27. This is going to be very, how can I put it? I like to say interesting, but this is a little different to interesting, and I'll show you why. Because there are chart patterns here that was suggesting, as I've said, over the last few days, that within the context of the Chapman wave, looking at higher peaks and lower troughs, going to the fourth highest peak is where we look for something else to happen. If it does happen, then we go to a leg E, fifth highest peak, even the sixth highest peak. But somewhere between the fourth and the fifth highest peak, very often, that's where other things can happen. So if you're looking at the E-mini, it's down 7 at 25.43. This is that leg E. This is the daily. If you're looking at if you're looking at the daily MACD, that's the moving average divergence, you're looking at the second arch having gone much, much higher than just an M pattern. It's like a very high right shoulder pattern. The stochastic's at 96%, and that's really very good. On balance volume is only in leg C, perhaps peak C today, and that's very good. But what I'm really looking at is that the 120-minute chart on the right, usually this is the monthly chart, I put the monthly chart right there, you can see that this spiral up going to this peak F, the sixth highest peak, at 2550.75, had the stochastic spike higher, and then together with the histogram, the on-balance volume 0% line declining sharply, so the stochastic declined sharply. And that says that we've got to put a whole bunch of things together. Number one is that the weekly chart did cross positive in the MACD. Stochastic's at 93%, very good. I mean, we're talking about 100 as max. And the daily is 96.5, and you've got 93.1 in the weekly. This is all very good. So it's going to be price action that curtails this upward move. Now, within that context, let me just run a couple of things here. The Dow, trading down 28 at 22,747, made an all-time high yesterday of 22,777. So it's down just a little bit from the high of yesterday. This is leg D. Same thing with the MACD. Stochastics at 97.48. The weekly chart has broken its resistance just as the E-mini had, and it's gone to quite nicely above the Chapman wave inside track repellent resistance line. So that says over the coming week, the low that was made on the weekly chart, that was the low of 22,416. Somewhere between 22,450 and 22,390 is going to be absolutely key for the weekly chart. In the daily, we've just made in the 120-minute chart of the Dow, we've just made a peak D, but so far it's not pulling back sharply. 22,720s is the 9-period moving average support. MACD hasn't crossed negative yet. Stochastic's only dipping down at 96%. And this red line right here is the relative strength index. It is pulling back. So I'll give you numbers that I'm looking at, and I'll make it on the Dow right now. If the Dow in the next 2 days cracks 22,620 to 22,570 support, that 22,575 level is the 9-period moving average. If it closes under that in the next 2 days, it is an inverted V-shaped pattern. And that says you've got what I call the Eiffel Tower. That's the uppercase letter A going straight up and straight down. And that says we could come down very quickly, but that MACD and stochastic is still giving some support. That's the reason we keep seeing buying on every dip. Within the context of the an upside breakout would be if it goes to 22,820 to 22,820 to 840. That's really strong trend line resistance. Now let's go to the S&P. Within the context of the S&P, we've got 2529.23 is the all-time high yesterday. Pulling back a little down today, 7.5 at 2544. If 2528 is hit below the 2529 9-period moving average support, if it closes below that, that's going to suggest the same thing: straight up, straight down. Be careful. So at this particular point, for my subscribers, we've been long, had mostly long positions. Yesterday we did try to short via the volatility index, took a tiny little 0.05 loss, not even a 0.5% loss. Today we went right back in. We did it pre-market, and we did it again right for those people who couldn't do it pre-market. Sometimes you don't have a platform that allows you to trade pre-market, so you have to wait for the opening price. They've done that again. And now we have an interesting situation. For some subscribers, they're long the Dow via the diamonds for quite a while now, but we've also just gone short the Dow. And this is just a position that says, I want to be there. I want to be ready. It'll negate the one, but they're two separate ones. The one I'm trying my best to keep as a core position for those subscribers who are long, lower down. And the other one is this opening salvo, which says if there are certain conditions that are met by Tuesday of this coming week, then we could come down not just a sideways consolidation, but deeper. Otherwise, I'm expecting chop, 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 sideways consolidation. Here's the reason why. If you look at the QQQs, the NASDAQ Power Shares Trust Series, trading 147.36, just down 10 cents, it is so close to making a leg D. Yesterday's high was 147.54, all-time high. Today's high so far is 147.52, 2 cents lower. And we're trading at 147.37 right now. So if it takes until Monday just to pop to make a leg D, and then the Qs next week start to decline to the 145.70 area below the 146 9-period moving average, that'll say here again, we're looking for a slightly deeper move to the downside. But if it just by Tuesday, we've actually either made a new all-time high and sitting at the all-time high, or we haven't turned around and gone even close to 146. That says, you know what? Sideways consolidation in a rotational market. And that's the reason why I wanted to go stair-step as we did on the long side. I want to go stair-step into the short side. It's all very well having an over 4% gain in the first few hours of the trading session. The Dow Jones is young, and time-wise, there's a whole day to go, and it's a Friday. Anything can happen. I want to do the step-by-step because there's still at 89% even in the QQQ on the daily chart. That's still strength. The weekly chart is suggesting that if there is a failure to rally, the MACD could deflect lower. I'll be back. We want to talk about gold because remember I was talking yesterday about the dollar in a leg deep to the upside. We've got a gold leg D or E, a trough D or E to the downside. Everything's ready to flip around. I'll be back. We've got we've got the transcripts that are high. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So it was mentioned that then that the transports hit a G in the cash. I get F. That's the 6th highest peak in the daily. It's the same thing as I get in the IYT. So let me just show you something very interesting. The IYT led the market higher in a very, I would put it in a very orderly way. Just there's this up channel that it persisted in staying between the support level, the rising support, and the rising resistance, just kept bouncing along. And then it made this top just the other day, 3 days ago, at 179.99, missed a round number by 1 penny. And the MACD is turning down, stochastic's turning down, but both of them actually have a positive rating right now. But the trend on a very short-term basis based on the 120-minute chart is down, and we're going to see what happens. What's important is that I've got a leg C in the weekly, but the C is, let me see, is that an all-time high in the C? Yes. So this is going to be very interesting because if this low in the IYT, the iShares Transportation Index at 160.64. I remember looking at this closely. 157.65. Week of the 19th of May. 157, and the one at 158.18 on the March 31st, week of March 31st low. If I had to negate that, I'd be at A, B, C, D. This would be an E right now. So every once in a while, I get a U-shaped pattern like this here. But when I look closely, I see that the low of the week of the 31st of March was taken out on the 19th just by a tad, 40 cents. But if I had to exclude that as a low, I'd be fine. But I can't just exclude that as a low. That is a low. So it says to me, I've got to think of this now just as a seed. Might have bought, I don't know, might have come back and say it's an alternate count, but that's how I'm leaving it. But make it real simple. If by Tuesday to Wednesday of this coming week, the IYT, the Transportation Index, is trading under 176, that's a real problem. That says it should be coming down, and the 174 to 173.5 area will be key support. If it bounces strongly by the end of the day or by Monday, then look at 180, the high that was made, 179.99, that whole 179 to 180 area could be a double topping area. I'm just treating it right now as real good chance that it's going to be pulling back, but pulling back short term. Now, one of the things I'm looking at here is I had said when we were looking at, because we are long the dollar from the actual low of the 8th of September via the UUP, it's a trading vehicle, and the dollar has gone to a leg E, not a D. An E, and the MACD is very strong. Stochastic isn't quite as strong as it was, but it's still darn good at 87%. Weekly chart is a single leg A. And I'm looking at that, and I'm saying to myself, I think that the gold trading in leg E this morning has a chance to bounce, but I can only call it a bounce because the weekly chart has a down arrow. I haven't yet put the up arrow into the dollar, although there doesn't have to be the one-to-one inverse relationship. It's just kind of more a trend as gold is going down, so the dollar should benefit, and that's really what's happening. And that puts me into the category of saying the dollar, a close at 93.84 right now, down 11 cents. A close by Tuesday below 93.20 to 93, that support would be very negative on the dollar. That's a close. It doesn't mean that it couldn't touch it and then bounce, but a close. And in the USD JPY, the currency pair, this is the yen dollar currency pair, it's gone to a leg C. There could be a phantom peak B, phantom C, and a D. I'm calling it officially a C. That's the way it is. And it's a leg A in the weekly chart. And this together with the dollar is saying there's a lot of support. There's a cushion of support. That's what I like to see. And that says that this should be just a transitory and momentary pullback as gold, go back to gold, as gold bounces, but where it bounces to is going to be very important. My thinking here, it's got about a week, I'd say 5 to 7 sessions of an opportunity, just an opportunity. That's what I said to Lou yesterday. I think that the dollar looks to me like it's about to have we're along the dollar, but I think it's going to have a bit of a pullback. And while it does that, gold, silver, even bonds could have a bounce. And we're going to be watching this really, and the VIX index could have a bounce. VIX index now is up 98 cents at 10.17. So gold says the low that was made today at 1262.8, trading at 1276.5 right now, up 3.3, says that gold could have a bounce to between 1283 and 1289. If it goes to 1293.95, that's a bigger move than I anticipated. And says, yeah, dollar could pull back for quite a few days, not so much in price, but pull back, and gold could have a bounce. And that's really what I'm looking at. If you look at silver, SI, trading at 16.84, up 0.20. It made that leg D. It hasn't made this is still a leg D to the downside. It can only be called A if Monday there's a higher high than today's high, whatever that is. But it's a nice turnaround. If you're looking at high-grade copper, remember we were talking about this yesterday, pulling back a little bit here, 3.02. This is a big move in copper. You're going to be watching it because 2.98 is the 9-period moving average. It's a 3.02. This is very nice action. All right, let's look at crude oil. No use typing it on the chart, mister. Okay, there we go. CL, crude oil. Down sharply today. That says now I have to put in a down arrow. So now crude oil is finally a reverse course. Had a nice move to the upper 52s. A peak E. That's why these notations are so important. And if you're looking at the weekly chart, it's gone to a leg C, probably a peak C today. And that's as an arch formation is forming. So it makes the support in the 48s really important to hold. A close under 48 says, uh-oh, this is going to be deeper. Yes, so the SCO, which is the crude oil, we were looking at DTW the other day. Was it DWT or DWT? Yeah, look at that nice move. Can't remember who emailed me. Was it Dan? Someone emailed me the other day. I said, yeah, it's acting well. If it can hold support and push higher, that's going to be very good. And that's saying crude oil, yes, this could go to a D. So that's the same thing. SCO, the DTW is the velocity shares 3 times inverse crude oil. And the SCO, I think, is only 2 times, and this has gone to A, very quick A to B, and here we're in leg C. So yeah, it says that we could bounce at 36.75 on the SCO up to, I think it has a chance to hit the 200-period moving average at 38. If it closes above that, the magnet becomes 39.50, the 200-period moving average. I don't know, that's a stretch. I'm just going one thing at a time. And if I do that, then I'm just going back to USO, which is United States oil. I put that in before that peak F top with the down arrow. This is leg to the downside ABC. So this corresponds exactly to the inverse. And what we're really looking at here is a crude oil based on the USO trading at 9.96 down 29 has a good chance to get into the mid 960s over the next 2 days. Basil Chapman, Tiger Technicians Hour. Dow's down 33, S&P's down 7.7. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let me just finish this up here. C2. Let's go to C2. All right, what we're looking at is very interesting. Is it interesting? Yeah, I'm just doing this very quickly. I'm gonna have to go over this again. I'd like to do it in more detail. It's called HACK. This is the Pure Funds ISA Cybersecurity ETF, looking very strong right now at 30.92. I don't want to do this quickly. I really would like to spend time on it. So let's just say it's looking very good right now. MACD is at expanding in the M formation. Stochastics at 98%, and if it holds steady, that'll be very positive. At 30.92, just to make it real simple, that if it breaks under 30.20, then it's going to take a digestive phase. It could test the 29.50, 29, low 29 area. But if it breaks into the 31.70 area, 31.70 area by Monday or Tuesday, that's very positive. So I just want to do that real quickly, and then we want to go back to some other things that we were looking at. What I wanted to point out, a couple of things I wanted to point out. Look, the XLF trading, it's in leg D right now, looking like it wants to reverse just a little bit here. Yep, there it is, leg D. If you look at key stocks like JP Morgan, very strong, gone to a leg D. I said yesterday that there was one stock that I expected it to go to a D. Was that Goldman Sachs? So this is still a very strong leg G/C in the weekly, leg C in the monthly, leg D in the daily. JP Morgan in 96.73. You have JP Morgan in a leg D to the upside, leg C to the weekly upside, and still running in a sub pressure trading band. It needs to get to 255.16 to start a leg B to the upside in the monthly. But all I can say is that, this is a stock that I'd said earlier would become a fourth quarter leader. We don't have it. We have a different stock, which is also doing very nicely. But this is very good action. Now that's suggesting to me, if I can just drink some water, that this financial sector is still going to be in play, even though I'm looking at the TLT and saying, this TLT made almost touch the 200-period simple moving average. It broke the 9 EMA support way back when it gapped down late September. It hasn't even touched it since then. Now there's a chance that 123.86 on the TLT, down 8 cents, it could try to rally like gold, like gold, silver, maybe even platinum. So we're looking at this and saying 124.62 is the 9-period moving average, 125.01 is the 200-period exponential moving average. I think it's going to break above it. If it can break above, all it has to do is to go above the candle of Thursday, 124.30, and it's at 123.83 right now. I think there's a chance that that yields could have a bit of a slide here. If you look at the TNX, what I said to subscribers this morning is that there are signs. For instance, look at this E reversal, but it has rallied very strongly, the 10-year. So this is still a single leg A in the weekly chart. So I'm watching it closely. If yields go to the 10-year goes to 24.10, a breakout to the upside, that's really positive. If it breaks down and closes below 22.93 by Tuesday or Wednesday, that's saying yields are going to be going lower as bonds rally, and that would put pressure on the market as money comes out of volatile equities and goes into the so-called safety of bonds. I think I've covered a whole bunch of things. I haven't covered platinum. Here's your platinum chart. This made a peak G top way back in September the 9th? 8th at 1030.50. Pull back sharply. Yep, it's getting close to bounce area. Same thing. So, just wanted to check any messages. GS does not compute with Chapman wave framework. Oh, okay. Yeah, let me put it this way. You remember Goldman Sachs had this whopping move from 280 back in 2015 down to 138. It's in a different cycle. It had an incredible month. One of the biggest months we've seen in a stock that goes back to the 1920s. In fact, 1929 is when it became an IPO, Goldman Sachs. So in November of 2016, it went from 174 to 220. That's a big move, $25, big percentage. Okay, so there's a slightly different aspect to it. So now what I wanted to do, a question I had was, let me see if I can find it. Yeah, well, just an overview of where you are and what you're doing. Good question. Become a subscriber. Get 2 weeks free. What I am looking at is a couple of things. Let me go back to the Dow right here. This is the Dow what I call the naked chart. All there are, they're just a couple of moving averages, but I don't have the MACD, stochastic, on-bounce volume, nothing here on this chart. I have Chapman wave 5 and the alphabet going to a D in this particular instance. The last peak, if you look at it over here, was a D at 22,179, the high of the daily chart, August the 8th, pulls back down to 21,600, August the 21st, rallies huge up to yesterday's high, and now it's still at a high-level consolidation. There's nothing much going on, but it is bumping into this big, strong Chapman wave inside track repellent zone or sell zone. And that's important. But the MACD is strong, stochastics at 97.80, 97.60, and on-balance volume is just turning down. If you look at the 120-minute chart, you'll see something equally as impressive. You'll see that the 120-minute chart has walked the 9-period moving average since it broke above it back on the 28th of September at 11:30. During my show, it was 1 o'clock, actually. And what's happened since then is that you've gone green. Look at these green candles. There's one actual red candle before you make this high of at 4 o'clock on the 5th. That was yesterday. And now they're just two modest little candles down. I think this is a process. And the process is because the MACD is still very strong but turning down. Stochastic still very strong at 96%. You didn't get this inverted V-shaped pattern in the stochastic to say over 80%. Good. Whoops. 3 to 5 bars later, you're under it, and that's bad. So this says that the at this point, I'm just calling it a high-level consolidation. Even though we do have a couple of short positions, it's still a high-level consolidation. All right. Just want to check in on the these things. No, everything's cool. Now, let's go to the questions that I had. A question is, I didn't want to get there. I'm going to get out of this. This is with Chapman wave projections. Let me just get out here. What I really wanted to show you was, and this is really fascinating. If you look at my longer term charts that have, there you go, that have the triple yield, the 3 yields, the 30-year yield, the 10-year and the 5-year yields, as well as wood, that's the iShares Timber and Forestry ETF, and the housing sector index of the Philadelphia housing, and the HGX, that's still acting really well. It's up 77 cents to 302.24. Wood, which is the iShares Global Timber and Forestry ETF, is pulling back just a tad after making all-time high. This is an all-time high this week. So this is just a process. I don't think it's just clear sailing. Bam, you've got a sell signal and everything goes to sell mode within a few days. It's a process, and it might fail. It might just go sideways. I don't think it's going to go just sideways. We'll talk about yields when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So this is very interesting because the NDX 100, which really should be trading exactly, the Qs should be trading exactly in parallel with the NDX 100. NDX 100 is at all-time high, 6,062. What was the actual high? This today is 6,062.84, and we're trading $1 lower. So this is going to be an important indicator because the QQQ, remember I said, I think it's C more than an E/C. I better put that in. It is an alternate count. I'm just putting it in to verify that there's a chance that there's an E, but it's most probably a C, which says, hey, high-level consolidation today into maybe Monday. A little bit of a pullback. One big spike Tuesday or Wednesday to a new all-time high. To D is a possibility, and then we can come down in unison. But I'm not going that far. I'm just saying it's real simple for me. If the Dow cracks the support, very near-term support of 22, I'd have to say closing under 22,700. If it goes under 22,700, there's a real good chance we've got some kind of an acceleration to the downside, but it also makes, if you're looking at the Dow, it makes this whole 22,200 area major support. Well, that's 500 points. It should be major support. So I just want to go step by step, all right? Next question I had was, would I look at the monthly chart of Goldman Sachs? Yeah, the monthly chart of Goldman Sachs starts a leg B, and this is really very bullish in the long term because stocks invariably should get to their peak Ds. Now, it could be an aborted pullback, break to the upside when the pullback itself went further than it should have. I don't really care. I'm just being pragmatic, saying you've got an A. I'm calling it a gray A. I should really call it a blue A. There's no other. No, I have to call it a blue A. There's nothing else I can call it. And that says that based on this particular pattern, regardless of even if we give back a huge chunk of the gain from 246, we go down to the 225, 220 area, there should be higher highs in 2017. Very interesting, isn't it? Okay. VIX index. I didn't get to the VIX. I'm going to get to it now. Technical Friday. I'll show you what I'm looking at. The VIX is quite strong as a candle, but the day is young. You know that by the end of the day, we could have a bounce in the market. Dow suddenly closes up 12 points. S&P closes down 1 3/4. And then all of a sudden you say, oh, boy, what happened to that sell signal? Let's go step by step. The VIX, this is a strong candle, probably way too strong at 10.06, up 87 cents, up almost 10%. It's too soon. It needed time. I would love to have seen the market pull back sharply, and the VIX would only be up 40 cents. That would say reluctance to recognize the sell-off is a bullish sign. At this point, we've got too many people or too quick to recognize the sell-off. So all I'm saying is go with the numbers. If there's a close towards the high of the day, anywhere above 10 point, where it is now 10.06 to 10.17, that's going to be good for looking at the bearish side. If it just pulls back and by the end of the day you're at 9.83, nope, not quite ready yet. That's why I'm saying it's a process. And there are still a couple of stocks that still look very strong. There are a lot more that are starting to weaken. So what I'm looking at here is within the context of the New York Stock Exchange and YA.X. We want to go through these. I'm calling this an F, peak F for now. I don't know. It's the MACD is good. Stochastic is pulling back. Down minus 38 at 12,300. Boy, this is just nothing. Nothing. Every opportunity today to really crunch to the downside. You don't take that opportunity. It says there's buying support. It doesn't mean to say you got to scream upside. It just says, hey, there's a lot of buying support. Maybe that's why we're also seeing selling resistance, and therefore we're trapped in the range. Now, within the context of the NYA, MACD is good. Stochastic is just pulling back, but at 94%. It's the weekly chart where the MACD just started to cross positive over the last few weeks, and the MACD is at 94%, and the monthly chart is in leg D and very strong. That's the reason why I wanted to keep a core position. I want to try to keep as long as possible. I want to add to some of these guys on a pullback. I want a pullback. Maybe that's the problem. So you don't want a pullback, you'll get that pullback. So all I can say is it's weird. I want to look at the IBB because we always look at the semiconductors and the IBB. That's the biotechs. This is very interesting. Leg D closing, sitting right now at the low of the day, 339, still within a trading band. Leg D in the weekly, leg D in the monthly, and a leg D in the daily. We've got, wow, and what was that in the 120-minute chart? Let's do it quickly. A, B, C, D, E, F, G, A. Oh, so that's a restart. So that's A, B, C, D, instant restart, A, B, C, D. Yeah, D. So I'm looking at this. I'm just going to give you numbers. I don't care which way it goes. I'm just saying. At this particular point, my bias is to think of it more as a weakening very soon. And that says a close below 334 to 339. I want to make it deep. A close below 334 says, uh-oh, sideways to down action should continue. Any holding in the above 336, the 9-period moving average, and pushing towards 342, 343. And I have to say, you know what? Fund managers are going to gravitate towards what was working periodically over the last year, would never work from the July 2015 high at 400 all the way down to 240. I think that this is a counter trend rally at this point, but that's where you might see some action. All right. So I've got that. What am I missing? Oh, I'm missing these stocks. Amazon right now. Whoa, what a big move. 995 up 14, having made the arch formation, that H pattern, did not close below the low of the 29th of August of 936.33. Used that with the MACD and stochastic improving a lot to gap up yesterday and to follow through today. Excellent move. But the weekly chart says, no, you're still in a sell mode just for now. I can tell you this, that if it goes to 1,025 by Tuesday, I have to consider that Amazon is anticipating the season, the holiday season, and it's a fantastic stock then, instead of just consolidating a while longer, which is what I thought it would do. Alphabet, same thing, breaking out at 978. It's got this trend line resistance in the weekly. Wow, that's why we're not tanking right now. We've got some strength in the NASDAQ sector, very specific sector, and that's very interesting. Okay, Google, this is Alphabet trading at 978. I believe this is the A shares, right? Well, it's trading. All it has to do is break above 988.25 to start leg E in the monthly chart and G/B in the weekly chart. This is very good action. Let's look at Facebook. Facebook was facing a lot of challenges. These challenges are just decimating Facebook. It went all the way from 175 down to 161. And now it's at 172, a V-shaped formation. Unbelievable. This is another ever-ready bunny, trading in gray leg B in the daily up 0.86 at 172.10. Very strong rebound. Basil Chapman, Tiger Technicians Hour. I'll be back. Dow's down 25, S&P's down 6.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, don't forget Steve coming up, Dave White coming up, Tom O'Brien again, and then have a great weekend. So what we're looking at is Facebook is showing strength, and that's just part of this rotational correction as one of the sectors starts to weaken, another one takes up the slack. But I'm amazed, look, GE is giving a hint to say there's some softness coming into the market. IBM is still near its retracement highs, but this is way, way off the 180s. Most recent high in 2017, going all the way down to the 137s, 138, and now trying to bounce. So I'm thinking that IBM's getting close to some kind of a pullback. The XLK, which is the S&P Select Tech Spider Fund, is in leg C. I could call it anything else. I'm calling it a C, and like the Qs, I think there's a bit of a pullback, maybe Monday, and then another pop to new high maybe. Most importantly, that's the sector rotation. RHI, a quick question here. Is RHI is Robert Half. Yeah, this is making a peak A, B, C. I'm doing this quickly. A D, Short-term top, it has the same thing where it's using time rather than price. It's at a spectacular leg A in the weekly chart. Let me do a little more work. I'll put it in here, RHI. I'll do it on Monday. What was the other one I said I'll do? Heck. I'll do more, and I'll do it over the weekend for subscribers. Start sending the charts out Saturday. So what we're looking at is a couple of things. I suspect that we're starting to see some weakening, but if you look individually at like a GM, we're trading at 44.79, a 45.17 high. It's just been remarkable. I mean, it's just this is what happens when something is in favor. It doesn't have time to pull back. You've got to hop on board and just grab it and say, I don't know, I don't like to. I'm going to buy it, but maybe a smaller position is going higher. And that's what's happened. Now I think it's a little bit, it really is getting somewhat vulnerable. Although it's holding well, it's overextended. So there are a lot of stocks that have done very well, need some timeout. I think we're in for a timeout. I think we started this morning. Hopefully we timed our short position right to the tick this morning. I don't know. That's the way it looks. We'll see what happens. Basil Chapman signing off. Check out my opening call. Check it out over the weekend. It'll be a good weekend to do that. Have a great day. Stay tuned for Steve. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.